All right, let's start with the SPY. We see the SPY doesn't look that bad, actually. It's just retracing back close to the 50-day moving average. If you look at these previous highs going on right here, it looks pretty good. I mean, it doesn't look bad. It doesn't look like anything's breaking down, you know, in a harsh way. If you look at that, you can see this is probably a nice little dip. We'll see if it breaks any highs. Maybe we can get some of that because the volume is declining. So let's back up a little bit. So this action has been really shitty, but again, if you're having a lot of the candles going up, the candles going down, it's let's see how many candles we got so we can kind of do a perspective. So it took what, 17 candles, and this is 8 candles, so it's half, but it's not even halfway there as far as down. So you can look at this, let's say, okay, 50% would be right here. So you have 50% of the days, it's not even close to that. It's not even at 25%. So I wouldn't be too, you know, bearish right now. I'd just say, listen, maybe it's giving us a good setup to get on the long side. QQQ, on the other hand, I'm not, you know, it's coming here, but I would wait just because of the price action of this day. If you look at the 30-minute, you can see pretty much it shot down pretty much very hard in the opening 30 minutes, and then pretty much went down and didn't give that much bounce at the bottom or at the tail end of the day. But you can see the price action right here is something I wouldn't be buying this one. I would look more at the SPY as a buy than the QQQ, just from the price action going on. IWM is still sloppy, and again, I just want to see some separation from, let's say, this level, that break down a little bit more, and then give me a pop up, and then I would look to be going to the short side potentially. You got DIY, excuse me, the diamond DIY. The diamond, this looks okay. I mean, it doesn't look that bad. I mean, again, only thing I don't like is that it comes up and it didn't get and layer on top of this. It came back into this price action, and I would prefer that it would not do that. I prefer that it would have gotten above the box and tapped it and went for more upside. But again, you know, you gotta trade what you see and trade the markets that you got, and go from there. So let's look at some names. Apple still looks okay. I mean, it still looks okay. Volume is decreasing to the upside. We wanted this low to hold at least, but again, I would not be going long after a day like this. The long I've been talking, you know, screaming about was right here. I wouldn't do this because, again, what, you're gonna break the high, you're gonna wait all the way, you know, from here to here is like 4%. I'm gonna wait for it to go up 4% before I get to a long status. Nah, I mean, if I would just wait, quite honestly. That's how I would play that one. Google is just not really giving much direction. We see that it was giving higher lows, lower highs, and we got to see how this one's going to pan out. But again, we just want to wait for it. Price line continues. I wouldn't short now. Again, you could have shorted maybe on this candle right here. You could have gotten in, especially this engulfing pattern, sideways, gapped up, faded down if you look at the price action, and then continues to the downside. These options are pretty expensive though, so just be cautious regarding that. Tesla gave up a lot today, almost 10%. So again, you just wanted to tighten your stops, especially seeing this price action going like this. And again, you want to look at the overall price action of what the market is doing. The markets have been pretty much very sideways, and it's been very annoying. But even for intraday, because you got a huge move in the morning, then it just pretty much just goes in this like this tight trading range, and that's indicative of low volume type of market. So you just want to be careful regarding that. You have Baidu as well. That again, this looks like it could be setting up for something nice. Again, this might not be what people like, but you know, we'll see if it holds its previous levels and what it does from this gap. So we'll look at that. Maybe this could be like a buy zone, but you know, you got to be careful. And again, falling knife type of action as well. You got to be really cautious about that. So it could come down to even here, and I wouldn't be that nervous of looking at it. So we'll see how that one plays out as well. Netflix is down pretty much hard today. I had one of my turn dates, if you looked, as 9/8 to 9/10, and today's the 15. But that would have meant, you know, tighten up your stops. I mean, if it's a turn date, it's actually means that it might turn. So again, these things aren't, you know, I'm not saying that I know everything, but again, if these things are, it gave you a great run from 425. And, you know, again, this is the reason why I don't trade breakouts, because somebody bought it right here twice, and now they're getting squeezed out. So that's why I would look at this to say, okay, let's be careful regarding that. And I had it as something I was looking at. Microsoft, I think that this is just a healthy pullback. Let's see if it could just hold these previous highs, but it's nothing about this looks bad. I mean, it's all right. You got two red candles, but so what? You know, the trend is up. So I don't see anything bearish about this that you have to be overly concerned about. Let's look at some of these banks. Bank of America, you know, trading sideways, breaking the upside. Goldman, this one still, you know, still looks good. I don't see anything wrong with that, especially showing some good strength. So maybe it's just rolling out of, you know, tech sector into the bank sector. I'm not sure. I'll do some more sector analysis later on, but we'll see what happens. But again, you guys have been knowing that this price action and this low volume, again, the low volume, if it's going up, you still can make money, but just it lets you say, listen, I'm gonna, you know, if I have my targets, let me keep my targets a little tighter. If I take it off of the targets, not just get back in on 1 or 2 bar pullback, I'm gonna really see if I can get a dip to purchase. Or if you're not in anything and you feel uncomfortable, you know, you have no problem just saying, listen, I'm going to stand down a little bit, because again, I think that, you know, a correction is due for these markets, but again, I don't know when it's going to happen. So just be cautious of that and trade a good setup, but just be careful. And if that means that you trade half of it, a quarter size that you typically do, to just use that to add on to your risk management, so be it. Don't take it off once it goes in the market, because that would be kind of foolish, you know, because you still want to make the money that you risk. You know, if you're risking $100, you want to make $250 to $300 per trade. But, you know, if you take your size down a little bit to say, okay, usually I do, you know, 20 contracts, maybe I'll do 5 or something like that, because I'm a little unsure, but I still have to, you know, get the proper setup. You can manage it like that. So keep these things in the back of your mind, and also remember that, you know, one day doesn't make or break a trend. And we've been talking about the stuff on the QQQ and the price action so far. So, you know, I'm rambling. So let me get off of that and take care.